how should I learn? And two, where should I start? What would be your answer to him?
Somewhere our Indian system is corrupted as well, is that, suddenly it crosses that fine line and jumps into advice straight away. People looking on social media for stock tips and this and that, Telegram channels and so on, right? So idea is that learning and advice are two very different things.
It's free.
Yeah.
Okay, and they can say whatever they want, but only the really good ones rise to the top. And of course, they must be doing something right.
Yeah.
Okay, versus the actual people in the profession.
You have to give credit where it's due to some of the influencers, and especially, ever since pandemic struck, these influencers have been marketing SIP as a concept, And I think one of the main reasons why we are seeing 14,000 crores of, retail money coming into the retail markets, equity markets via SIPs is probably because of influencers.
Okay, Nitin, you're here for the very first time in the studio in Bombay. Could you just tell us about Tavaga for our listeners? Folks, that's Tavaga. You can check it out on the internet. It's among the oldest robo-advisors. I remember, I think back in, was it 2015 or 16 or 17, I used to talk with Ravi on Twitter, and we used to do a lot of, back and forth at that point of time. Of course, now it's 2023.
Yeah.
You guys, thankfully, Touchwood are still around. Could you tell us about Tavaga and, stuff like that?
Sure. So Tavaga is India's probably first robo-advisor in that definition of robo-advisor. Now, robo-advisor in SEBI's parlance is online advisor with no human touch point. So this is what we do. We originate advice on our platform, and then we distribute it through our various broker partners, going only into exchange-traded funds. So we have a SEBI's license there, which is of RIA, Registered Investment Advisor, and we work under that.
Okay. So I want to start with, the use case out here, which is that retail investors lack high quality advice, because high quality advice is typically meant for HNIs and stuff like that. Okay. And you guys are a SEBI registered investment advisor. And let's delve into that. Why is there lack of high quality advice to retail investors?
Sure. So Anupam, when we started, the whole idea was that sometimes the advice is very ad hoc. When you go for retail investors, they are very much dependent on their local branch relationship manager, either through broker or bank, wherever they are relying on. It's not sort of very, very sort of qualified in our humble opinion. The whole idea of Tavaga, the way it originated was, and we were the bunch of guys who had worked with institutional equities. So we had advised like best of the pension funds and mutual funds globally on quality of advice and so on. So we said, why not take this advice, which we know it's top quality, like back tested and really, top of the class. Why can we not knock out intermediaries and offer it directly to retail clients and kill all the conflict of interest in the value chain? More importantly, kill all the fat layers of, fees or sort of trailing fees or whatever you call, kill all that and offer it directly to retail. And importantly, be very consistent with the advice so that it's free of human biases, there.
So I want to talk about two things out here. I'll start with the first one, the advice ecosystem. Okay, let's get into a bit of detail about that, because these days, anybody, literally anybody can give financial advice, rent versus buy, and SIP versus this, and lump sum, blah, blah, blah. So, if someone were to come to you saying, Nitin, please help me make sense of this. One, how should I learn? And two, where should I start? What would be your answer to him?
So yes, that's a good question, Anupam, because there's a very fine line difference between financial learning and financial advice. So idea is that if you are learning something for an educational sort of purposes, it is very different. But typically the way somewhere our Indian system is corrupted as well is that, suddenly it crosses that fine line and jumps into advice straight away. People looking on social media for stock tips and this and that, Telegram channels and so on, right? So idea is that learning and advice are two very different things. This is where somebody should keep a very strict sort of, line about, what they're trying to learn versus all they are seeking financial advice totally there. Our first level of financial learning when you were a research analyst and I was a research analyst in our previous lives, we came from our first degrees where we studied finance, in textbooks, and then we practiced it for so long, learned from gurus of the industry and then moved on to our own. Versus what we see right now, it's very different, use cases there.
You're not on Instagram, is it? आप लोग कुछ reel नहीं बनाते हो?
No, we do make reels.
But good stuff, right?
Yeah.
Okay, and the second part is mis-selling. Okay, you kind of touched upon that in the first answer that you gave. When a retail guy goes to a bank, he's jumped upon by at least 10 different people selling all kinds of random stuff.
Yeah.
Somewhere in the social media world, that's also translated into absolutely random Telegram channels saying that this stock will double, triple, etc., etc. Let's just talk about that in detail. How to the problem of mis-selling and why should our listeners really pay a lot of attention to where they're getting advice from.
So idea is, the joke goes, Anupam, really that, when you're going to your bank or broker branch, so the person that you're interacting there is not trying to solve your problem. This person is trying to solve his problem or her problem, which is monthly targets, right? So essentially that's the background, and it's the sad reality of this world out there, that retail customers especially, rely a lot on, these banks and brokers for retail advice and so on. And somewhere, anything which gets pushed on, which without understanding their problem statement is a very big mis-selling factor, which we need to sort of, address it straight away. So advice, the word advice is very holy to SEBI right now, that, not anyone can use that word advice even in their company language or company definition per se. Likewise, wherever your conflict of interest lies, you need to disclose it as well, which is not done on social media definitely, the lines are crossed like left, right, center on a daily basis. But hopefully, we'll also mature as a market very soon, and, we'll get those regulations in place.
Yeah. So I'm trying to understand, if I take the side of finfluencers or whatever, in their credit, they do create a lot of content. Now, you or me might have some opinions about it, but they have the audience.
Yeah.
Okay. It's free.
Yeah.
Okay. And they can say whatever they want, but only the really good ones rise to the top. And of course, they must be doing something right.
Yeah.
Okay. Versus the actual people in the profession. Okay. Advisors like you, maybe chartered accountant, whoever it is. Who charge people for a certain service. And there's a big gap between the two. I don't know whether the gap will be filled or not. Regulation is trying to catch up somewhere and say ki yaar you can't really say everything rubbish on social media. If I am someone who's consuming this free content, okay, what would be a few guiding principles for me? When who to take seriously, who not to take seriously. Okay, like we're literally on one podcast which is also doing the same thing.
Yeah.
But what do you say?
So first, just a devil's advocate avatar or version there of the story, that you have to give credit where it's due to some of the finfluencers, and especially, ever since pandemic struck, these finfluencers have been marketing SIP as a concept, And I think one of the main reasons why we are seeing 14,000 crores of, retail money coming into the retail markets, equity markets via SIPs is probably because of influencers. They've reached very broad audience in tier 2, tier 3 cities where traditional brokers, banks were struggling to reach and so on. So that's a good part which is being done definitely, right?
Absolutely.
Where it gets messed up, essentially when they take it too far, they just try to over leverage, there are some events being marketed, there are some stocks being pushed, so those are the factors where SEBI needs to come down really hard and, take a sort of, hard stance on some of these things. Now, we've seen these things coming in Australia. We've seen these things coming in regulations in the UK. Even in US, the meme stocks and others were eventually being sort of, addressed very harshly, in terms of how they were being so marketed on social media, and especially even I say media houses as well. Somewhere, they are the ones that need to be regulated a little bit, in our humble opinion.
Yeah, tough one. Okay, so before we go into the break in the second half of the show, Nitin, active versus passive, right? Because passive has become massive.
Yeah.
Okay, what's your view on this shift? And how your model is to recommend. Yeah?
Absolutely.
Let's talk about that.
Yeah. So Tavaga, by virtue, advises the robo-advisory module. We advise only into exchange-traded funds. Now, the core philosophy is that you do not need thousands of mutual fund schemes to solve your personal finance problems. All you need is a combination of 5 or 6 good exchange-traded funds, and that will do the personal finance bit for you. ETFs, exchange-traded funds, or index funds, can be another alternative solution to it. So the whole idea, Anupam, is very simple. As markets mature, the fund manager's capability to outperform the market diminishes. And that's where ETFs become suddenly like a really the talk of the town, or, really good sort of, instruments to invest in. In fact, slightly technical, but if you see in the latest SPIVA reports, 95-96% of fund managers on a 3-year rolling basis actually underperformed the benchmark indices in the large cap universe. And that's where ETFs, the cost saving is the only alternative which is there for retail investors, and to, lend into that. So that's the origination and that's the cyclical shift of, towards ETFs that we are seeing right now, not only in India, but globally as well. And that's been the underlying principle of Tavaga advisory as well, that we charge for our fees. We have no conflict of interest. And then all the cost savings that we are doing for our investors or our clients is going directly into ETFs.
Okay. ETFs and index funds. I see you're using the word ETFs a lot. Do you have a point of view there between the two?
Yes and no. I mean, like maybe 5 years back, I would have said that probably, this is better than that one. It's just a convenience factor. And effectively, and in a country like India, we have 10 crores demat account now. So probably that line is diminishing more and more. So slightly more biased towards ETFs than index funds.
Yeah. I mean, I'm just, I like the fact that there's a whole range of ETFs now.
That's right, yeah.
10 years ago, 20 years ago, this was literally non-existent.
There are more than 100 ETFs in this country right now.
100?
Yes.
Yeah. Oh, but you know the issue is liquidity. Price discovery. I don't know. What's your view on that? Is that,
It used to be an issue earlier, not so much right now. The good ones, the better ones from the big sort of fund houses, they have very good liquidity. Market makers are there, which are being appointed by the fund houses. Especially tracking error is like getting reduced, except for the black swan events that we saw. The tracking errors are really in control, and so those things are not really a concern that much now.
Yeah, and this is a good point to take a primer of ETFs versus index funds. Basics. Let's talk about that. How is an ETF different from an index fund? Let's get into the absolute basics.
Sure. So, just like mutual funds, with the ETF, the index funds also, you have to understand it like as a pool of capital, which is being sort of subscribed, and then you participate in that pool of capital to buy some tracking instrument. Now, what happens at 11 a.m., let's say, you suddenly become nervous about the markets and you want to sell it off. So the basic difference which will happen between index fund and ETFs is that in index funds, you will get the day-end NAV, while in ETF, your 11 a.m. call will be 11 a.m. call, and you get the NAV which is there on 11 a.m. So that's the basic fundamental difference, that is there. In terms of execution, of course, there's a demat account which is required for ETFs, and there's no demat account required for index funds. And then there are hundreds of other, small differences which are there as well.
So folks, there you go. An ETF is a brokerage product. I mean, you need to have a broker for that. You call them up or do it online, and you get your daily price. You get your intraday price.
Yeah, intraday price.
An ETF and index fund, you get the end of day price. You do not need a demat for index funds. Although I don't know why people are putting mutual fund units in a demat. I have no idea why they do it, but okay, whatever rocks your boat, guys. Okay, Nitin, let's talk about Tavaga, the various services that you offer, the various products that you offer within your service. Like, for example, do you also do, all financial products like insurance and ETFs and mutual funds? Let's go into that.
Yeah. So, Anupam, the fundamental problem that we started addressing was advisory and no conflict of interest, So that was the biggest differentiator that we had, We started with robo-advisory, where people were setting up their goals, and that was going into ETFs. It's a very good product for anyone in the 22 to 40 sort of age bracket, I would say, Problems started happening when the complications increase. When you age up, you have like a more number of dependents. You might have sort of more sort of complications in your financial needs and so on. You might like to mix it up with stock investing directly, which is what has happened in the lockdown as well. In last 3 years, people have been buying left, right, center. Looking at to all the advice which was available. The DIY investor community mushroomed a lot basically, and this is where portfolios got messed up a lot. So we are still trying to solve that problem with technology, but unfortunately, under the robo-advisory domain, we don't have that solution right now. So what we are doing is we just extended that to something called customized advisory, that we take these portfolios offline. One of our advisors in the team actually goes through the portfolios, and then we advise accordingly of what to buy, what to sell. And there the spectrum is full because it actually includes investing into equities, bonds, fixed deposits even, and anything which a personal finance doctor would need basically. So we essentially qualify ourselves as like a financial doctor there, looking at a 360 degree, sort of a portfolio and then advising on that. But for anyone with less complications in the portfolio who would like to keep it simple, let experts run the show, robo-advisory is the perfect solution out there.
Yeah, so you're saying that you accept both types of people, one with an existing portfolio and one who's absolutely brand new.
Absolutely.
Both of them will come into your service.
Absolutely.
Give us an example of a messed up portfolio. I want our listeners to understand that, from someone who does this for a living, who literally has a product out there. What is a messed up portfolio?
Yeah. A messed up portfolio is something where you have everything and anything under the roof that, okay, this guy suggested this, let's buy this. So what we looked at like 3-4 lakh of portfolio with 93-95 stocks in there. Now, how do you clean that? What is the whole idea of, achieving any objective? Somewhere, thanks to the social media push and everything, retail investors are very good in buying, but very poor in selling. So our biggest challenge, is that, okay, let's start cleaning up, your portfolio. Let's sell something, and then there's friction, in selling those stocks as well. But messed up portfolio is something like that, right? I mean, what are you trying to achieve with 93 stocks? Probably it's a wholesome game which one single ETF could have solved anyways, right? So that's the whole idea that we need to explain, educate any sort of individual that the DIY investing was great when you were working from home, but now it's back to office. Let some expert like Tavaga, run the show for you.
You don't find resistance in that, because here I am on my great brilliance and intelligence. I found 95 stocks. You woke up one fine day and say sell everything and buy something as dull, boring, and non-sexy as ETF.
Yeah.
How does that work?
Yeah. So I mean, that's the hard reality actually has to pitch in. The financial education bit actually kicks in there, where you sort of make people understand that what is the end objective, and what are you trying to achieve with 3% or 2% stock in your portfolio. The whole idea, that's where some bit of education helps. And then there are people who take the advice as well, buying, selling and everything, but selling is really, really difficult for retail investors.
Yeah. What about debt? Is debt also included in your thing?
Debt is also included. Yeah.
How
Sometimes we see so idea is that some fixed income products, we do advise on that as well, depending on clients' requirements. Actually, it's totally on a use case basis, Anupam. Let's say if you have children's marriage next year or something, right? Then of course you can't promise returns on equity or something, so you're better off advising as boring as fixed deposit. That park money in fixed deposits, rates are good right now, and so on, and then just move on from there.
Do you find any sophisticated people who say that I want a debt ETF? I've got mutual funds with no logic.
Yeah.
Some might be in GSEC, some might be in short term, some might be in corporate credit or whatever.
Absolutely.
Do you also shift that to ETFs?
Yes. We try to shift as much as to ETFs or cost saving instruments as possible. The biggest friction we get is for gold ETF actually, where people say that, "Arey, wife ke paas bahut jewelry hai, yaar, we don't want to buy gold ETF," and then we have to make them understand that gold provides stability in your portfolio. Why is jewelry you're not going to sell, but ETF you're going to sell? So those are the things that some of the things the education side happens. But gold ETF is the funniest one, where there's a lot of friction of people saying, "Arey, wife ke paas bahut jewelry hai, we don't want to buy gold ETF," and then there's a reason we propose so gold as integral part of investing in our bucket.
Okay, talk to me about ETFs, which are the broadly the ones that you guys advise, because I know that ETFs are all across the board, and we spoke about liquidity, price discovery, price impact, stuff like that, and there's some ETFs which I think we saw in the lockdown बहुत आगे पीछे हो गए. The underlying NAV versus the traded price are always just I want to talk about the risks out there, because folks remember that with ETFs and index funds don't carry this risk. What happens is that the market price at which you are buying versus the NAV, the underlying NAV of the same ETF can kind of go to a toss. Nitin is going to address that query and talk about slightly bigger ETFs maybe, which are which don't have that problem.
Sure. So idea is with any such ETFs, the things that we look for while shortlisting them. Let's say first thing is which fund house is doing that. How old are the ETFs? What is the tracking error history which is available for that ETF? What is the liquidity? Are there market makers of those ETFs? To provide that liquidity. If not, there have been cases when we've gone back to fund house and told them that please appoint them. By virtue of SEBI's mandate, they have to necessarily appoint market makers as well. So that is one thing which has been taken care of in terms of market maker and liquidity perspective as well. So idea is to just shortlist those ETFs where these fundamental checkpoints actually tick and everything. But one biggest thing that one should look at, while picking up any ETFs is that, let's say we advise Nasdaq 100, N100, MON100 is the ticker now, by Motilal Oswal as one of our ETFs, in the bucket of advisory that goes out. And the whole idea of picking up Nasdaq 100 versus Hang Seng, let's say, has been, varied reasons, of what's the portfolio, what will it do to your returns, what is the risk which is getting added to your returns and so on. And that's where our sort of specialization come into picture, that we backtested the data for 15, 17 years of available data that we had, and then looked at the right portfolio, right allocations and so on, and essentially knocked out, Hang Seng totally from our advisory and said that, okay, for INR depreciation, sort of hedge for good quality companies and everything, we'll probably pick Nasdaq 100 as one of the ETFs in our bucket list. So again, depending on the fund house, which fund house is having market makers, liquidity, and multiple reasons, how you go about picking up any ETFs. We changed ETFs as well. There was one mutual fund, very old mutual fund, where we were having their debt ETFs, I think, and we moved to some other fund, so that exercise we do constantly, in our journey as well.
And the good part is that you take all this headache away from
Oh
me.
yeah, that's where we charge for our fees. Yes, absolutely, yes.
Yeah, because folks, let's say that someone who's listening out here say that I want to make my own. I'm a DIY ETF. I mean, head explode kind of DIY ETF. But all the best to you. Even if you are a DIY ETF investor, you also need to be very careful which ETF you're choosing. And Nitin spoke about that exactly. Nitin, tell me about the procedure. Okay. I'm someone who's coming to your platform for the very first time.
Yeah.
How does the process work for me? What is onboarding like? What is the risk profiling like? Let's talk about that.
Yeah. So Anupam, idea is that when I started about the journey of Tavaga, the whole idea was that every individual is different and every financial goal is different in terms of risk profile. Let's put it this way, right? So let's say you might be very aggressive for a retirement goal in 10 years of time, but your risk profile might be very conservative when you are planning your next holidays for 3 years, let's say going to Bahamas or so on, right? So that is the level of, sort of difference happens, when you are bucketizing your different financial goals and then, separating on that aspect. So the biggest issue that we had was how can we leverage technology? Because we cannot do it just like a personal finance advisor. Otherwise, our cost will sort of hit through the roof, and then we'll have to pass it on and so on. So what we do essentially is when we are onboarding the customers, we are asking this customer to play a risk market simulation game. Now, what it does is that if you are fairly aggressive, which most people think that they are actually, so they think they are, but when they are playing the game, they actually suddenly downgrade themselves to more moderate or, conservative sort of an investor. And then we get those requests like very often saying that, Acha, with Tavaga, we want to play more aggressive portfolios and so on, and not being conservative as well. So what we are doing is we are asking the risk simulation. In the risk simulation game, we are making sure that people understand that, these instruments carry market risk. If you play higher risk, you will actually incur losses as well. And then we rank users on a rating of 1, 2, 3, 4, 5, which is more internal in nature. Now, depending on that, we ask them to set up different goals for different time frames and so on. Once these are done, then we map the retail broking account, whichever this person has. By virtue of our licenses being RIA, we are obliged to give services for all broker licenses, all broker accounts that people might have. But we do have our API integrations, tech integrations going into leading brokers in this country. So we advise on those basket of ETFs. Customer will see those ETFs, once they log into their broker account, and then they bounce back to Tavaga application where they're going to track it. So Anupam, for 3 years, we have not changed our fees for retail clients. Robo-advisory comes at 600 rupees per customer per annum, irrespective of the number of goals that this person is setting up on our platform. And we are fairly determined that we are not going to change fees on that, for hopefully future and everything, from that perspective.
And what is the scope of services here?
Here, robo-advisory. So idea is in the Western world, if you look at the services of some of the robo-advisories, they actually knock out human interference in this advisory domain or so on. In India, we have not done that. We are fairly open that whenever there's a customer query or something, if there's a need for advisor support, we provide that as well.
Let's take an actual simulation out here. I'm someone who comes to you with a portfolio, maybe 5 lakhs. I'm a salaried employee. My income is 50K a month, whatever it is.
Yeah.
Okay. And I'm zero in the sense that I'm literally starting off.
Yeah.
So you're going to advise me some ETFs, and that's going to get into
That's
my.
right.
I need to have a demat account. I assume, or will you take care of that?
That's right. Yeah. No, you can open up a new demat account also through our links, which we provide there as well. We don't get any commission or anything for new demat accounts that are getting opened as well. So with a 5 lakh portfolio, Anupam, the typical use cases is, to make people understand that it's great, you can actually start saving for your personal finance goals buckets. This is what people have not thought about, when they think about investing in markets and so on. So our very good use case is somebody saving for their children fees for 800, 1200 rupees SIP per month, next year and the year after that. And that's where people understand that they have to bucketize their financial goals, and average user is probably at a 3 times, financial goals that they are being set up on our platform, different goals, different bucket, and different sort of, totally savings towards that, So those things technology solve very beautifully, and those are the, varied, allocations which can happen as well. versus taking that 5 lakh and advising you that, okay, invest in this ETF or that ETF while not keeping a track of, sort of personal finance goals there totally. So being SEBI registered RIA, this is the personalized touch by virtue of technology that we provide as well, that bucketize your goal and then let us do a separate allocation and separate, recommendations for that.
What do you not do? Okay, what services do you not provide? And I'll tell you where I'm coming from. I'll probably give you a little bit more perspective about that. You wouldn't know about what my background is in the sense of what, let's say my priorities are. Maybe I'm saying something to you, maybe I'm not saying something to you. Do you guys also take care of that in the sense that do you ask me, hey, listen, investments is all fine, but do you even have insurance in place?
Yeah.
Okay, let's talk about what you don't do, which probably our listeners should be aware of.
Yeah.
Go on, sorry.
So first thing is, we ask for all the, let's say, all the questions. We are very much dependent on that. Let's say we'll ask you, what's being your sort of salary, annual income, number of dependents, and then, you play the risk simulation game. Combined of those questions, we give the risk profiling ratings and so on internally and within our systems and so on. So what we do not go is verify those details. Let's say you say your income is 20 lakhs, we'll take it for, that granted, we don't verify it.
You can't also, I guess.
Absolutely. That's first thing that we don't do. So we have to take everything on the face value of it, right? That includes number of years of investments and some other questions as well that we sort of, have to take into consideration. Second thing is, Anupam, by virtue of our licenses, we do not touch client's pool of capital. So that is one very important factor for us because we do facilitate execution, and this is where technology helps us, to actually facilitate execution. But by no way we have access to client's pool of capital. Our advisory fees is also through separate payment gateway that we collect. But very importantly, we stay away from touching client's pool of capital, right? So that is another thing that we do not do. What we do not advise is crypto, real estate, and some other things as well, right? Where SEBI came out with very clear mandate for us that you have to keep away from crypto advisory and so on, but unregulated space. And thankfully, we never got swayed by that, in our journey as well, because there was a time where if you were not advising on crypto, you were the idiot in town. But we kept away from that as well.
Very happy to be an idiot.
Yeah, happy to do that.
Insurance?
We do that. Yeah, sometimes. Yeah, people come for that also.
Okay, what happens at the back end, under the hood, right? Because I'm, once I've started with you, then do I have to do the buy sell of the ETFs? Let's say that, we are into March 2020 and boom, you're telling me that you should put money into any, whatever equity ETF, and let's say that I allocate money or whatever. Yeah. What happens under the hood?
Yeah. So very interestingly, Anupam, because when I was giving the introduction of Tavaga in the start of this conversation, one of the things which happened, within Tavaga, when we were discussing the workflow with our tech teams and deciding, okay, acha, this is what we should do, this is what we should not do, this is where we should include friction points and this and that. Now, robo in engineering parlance is automation, that you automate anything, right? So what robo-advisory does is automates actually everything. So what it does is you backtested the algorithm. That is a one-time exercise, which we did. Basically, then we keep monitoring it as well for slippages or whatever happens there. Then there's automation of advice. You set up the goals, different advice. Then there's execution of advice, which will actually flow automated, every month. And then you sort of pick up your baskets and execute. We cannot execute on client's behalf, but we facilitate on client's behalf. So which means the client is actually the one who's executing the end advice as well. The place order thing is coming from the client as well.
But that happens within the Tavaga app, or do I?
It is all within the Tavaga app.
You don't take me elsewhere.
No, we don't take you elsewhere. Right.
Okay.
So that's where the tech integrations come into picture. That we have our tech integrations going to leading brokers. So that's pretty much from the user perspective, it's everything happening in the app itself.
So go on. Sorry.
So the joke which was I was talking about that we were discussing that all this automation and everything into advisory, the idea was that somebody suddenly said, yaar, agar sab robo karega to hum kya karenge? And that is true actually. That's the whole idea, that you automate everything, you reduce your costs significantly on back of that, and you offer all those benefits directly to retail clients, and hence 600 rupees flat fee sort of an advisory that that level of interference by any human is knocked out totally. So it's essentially the tech team and the financial advisory team in the back end which is running, and then you just scale it up from there. Boom.
Okay. 600 rupees plus 18% GST, right?
It's actually 600 is inclusive of GST.
Nice. Do you guys take care of certain situations where I say that hey, I woke up in the morning and mera 10 lakh ka lottery lag gaya? Okay. Of course, my listeners, I hope that all of you get this every day of your life. Lotteries are tricky.
Yeah.
What do you do in a situation like that? I mean,
We've had Anupam users who actually
have win 10 lakh lotteries, is it?
were pitching us actually crypto, that hey, you know what, you should also stop this and invest in crypto actually.
Right.
So we've seen that cycle multiple times in our journey, and coming from financial services in last 2 decades, we've seen it like obscene number of times happening to us as well. But here in this particular case, it was not a lottery one, but client reverse pitching us that you guys should buy crypto as well in your personal portfolios and so on. And sad ending actually. So
do I get access to your advisors? I mean, is there actually a human being who's sitting and talking with me, or is it all a bot?
So idea is that as portfolios become complicated, Anupam, this is where human advisors come into picture. So we do have a bunch of team of guys as well. So this is where any such complication is actually routed through them, where we don't have 100% tech solution as of today. It's more hybrid, where a human advisor is also there to help us out.
Okay. Last couple of questions, Nitin. Standard, kya lagta hai? Where do you think we are headed? I mean, we are here in the mid of April 2023. Markets are kind of looking, stock markets that is, are looking kind of up. And these days you get more question of which is the best FD to buy rather than which is the best stock to buy.
Yeah.
Okay. Where do you think we are going?
Idea, Anupam, is, continue to remain with a stock research background, continue to remain very bullish on India long term. I think the biggest competition even for Tavaga advisory or anything is FDs and real estate investments and so on, right? Where the demographic advantage that we enjoy as a country, I don't see any risk why people are getting so conservative, that they keep their money parked into bank accounts and real estate and so on. I think next 2-3 decades it should explode, by virtue of investments coming into various businesses, be it in startups, be it in equity markets and so on. There are hundreds of beautiful companies out there doing phenomenal work. In the startup universe, there are thousands of companies doing exceptionally good work as well, beyond the headlines that you see in the newspapers. So if you ask me where's the market might remain volatile for a quarter or two, but let's say for anybody who's taking a long-term bet on India, I think these are best times, where probably some bit of froth is being cleaned out, by all virtue of higher valuations and all those cleanups which had happened in private markets as well. Best time to build, products, best time to start new ventures, best time to invest and look for, those underdogs who will become the HDFCs and ICICIs of the future, essentially.
Lovely. And what are Tavaga's future plans?
Exactly, to scale up advisory, Anupam. I mean, that's where we are very passionate about that. When we were building up our sort of, mission statement, we were very clear that we want to democratize it. We don't want to be looked as these are the wealth managers of the privileged with technology as an edge or something around that. So advisory scale up is something which is a very wide space in this country. There are no real competitors for us, and that's good and bad as well sometimes, But whole idea is that we continue to remain very passionate about advisory as a universe, and we continue to work on those things, which will help us to scale up this business from where we are.
Fantastic, and I wish you guys all the best. Okay, Nitin, standard question to all my guests on this show: favorite book or any content recommendations to our listeners?
Yeah, Anupam, I think I'll go slightly off topic here. There's a lot of people who talk about general books like The Monkey Business and Liar's Poker, in our industry, of our ex-industry, where we were part of. But one of my favorite books, and this is something that I studied in business school, probably I took that book very seriously than other books, definitely, was Valuation by McKinsey, and...
Hey, Valuation by McKinsey. Potha de diya, matlab, listeners ko.
So idea
guys,
is...
all the best with that. But hey, listen, if you can survive, I mean, if you can learn from that book, then go on, please, sorry, go on.
So idea is, if this book, as I remember it, and, I really got it from the library, started reading it, as a business school student, I was learning up, on finance and other stuff as well. It started by really, taking up a small use case or a small company and then talking about what are the instruments of, investments available to a CFO, right? It went through the journey of a small company till the time it went to an IPO. And that was a chapter-wise chapter, that it was there's a very formal learning process which was coming into picture as well. Now, mind it, Anupam, just like you, I'm not a big fan of social media learning. I know I have huge respect of, qualified institutional, learning setups as well. It's a peer group that people learn with. It's a good professors, that it's good books, that you learn with as well. But this book just stood apart for me in life, that how I learned about, various stages of a company, what are the instruments available, and then just making practical use cases around it and so on. And then taking it talked about new generation companies and some other things as well, if I remember correctly. But all-time favorite book,
Can't go wrong with that.
You can't go wrong with that.
And that's the kind of book you keep in an office when you're,
Absolutely.
if you're a research analyst and if you're working for a large organization, that book is going to be there in your library somewhere.
Absolutely.
If you should go and read that as much as possible. And the best part about the book is you can actually, read bits and pieces of it, come out with some learnings, apply that. And especially, if you're someone, and I guess a lot of people are, these days of making their own valuations on Excel, that's the book that you want to be reading. I mean, like Nitin said, both of us have the research backgrounds. We've slogged in that area. And valuation by McKinsey is something that you can't go wrong, of course. If you're an individual person, thoda mehenga hai, right? I mean, what's it?
Yeah, I think it's 7,000 something on Amazon.
Yeah, thanks for that thing. But hey, listen, it's not like we want to encourage you getting that from some other means. But I think, I'll leave that to the imagination of our very intelligent and smart. Just get that book. I would keep Damodaran on my bookshelf. If I'm doing valuation, I would keep the McKinsey book. And then, then of course, there's all the other non-fiction type books that you would read. Where are the customers? Yours, stuff like that. Intelligent Investor. But for someone of the craft who wants to really sit down seriously into business, and these, books like Valuation by McKinsey, something that you should definitely be checking out. But that is it. That is a wrap on this episode of Paisa Vaisa. My guest, Nitin Mathur of Tavaga, robo-advisory firm. Nitin, thank you. Thank you so much for coming down, being here, sitting in our studio and doing this for our listeners.
Thanks for having me.